And with that, folks, we're going to move then to our final speaker of the session, Michael Nauss. Now, once again, folks, we have had a tremendous 2 days. We've had 15 speakers that have shared with us their techniques and their approaches for the markets. And we're just delighted to have Michael here with us, who is going to share how he trades the markets. Now, Michael, he's been scalping and trading the market for over 12 years. And during that time, he's become very enamored of the Trade Ideas tools for trading and investing in the market. And he's become an avid user and a content creator for them. When he's not backtesting a new market pattern or researching the next best algorithm for Holly, the artificial intelligence engine at Trade Ideas, he's helping customers with their setups and their automatic trading systems. And with that, please join me in welcoming Michael Nauss to the room. Hey there, Michael. How are you doing today?
I'm doing good. Can you hear me okay?
Oh, we hear you just great.
Oh, perfectly. Perfect. Okay, so I guess I'll get the screen share going here too.
Yes.
Right. All right, is that working?
Yes, it is. We see that, and you're coming through loud and clear.
Awesome. All right. Well, thank you guys for having me, first of all. And I want to get started a bit too by talking about Stephen Bigelow, because I've actually been following him. I've never met the guy. I don't think I've ever talked to the guy, but I've been following him and his trading style and techniques for years, for maybe 10, 15 years now via YouTube, and introduced him by a friend. So it's kind of cool to be in the company of people that you once kind of use them to learn to trade, and get to be in the company with them and get to teach you guys some of what I've learned and kind of take them for myself. So I'm glad to be here. So we'll start with this disclaimer. I'm sure you've seen this a fair amount over the last few days, in which we need to make sure all the lawyers are happy, and I'm here today representing Trade Ideas, which is a trading and investment service. We have and machine learning, artificial intelligence that likes to spit out and suggest day trades and short-term swing trades to our clients. So you can see all of that here, but we are here for education, and we're here for this content providing. We're not investment advisors and all of that. So now that we've made the lawyers happy, who am I guess is the first way to start out with, and I'll give you a little bit about me. So you know who you're listening to. So I've started trading, again, in the introduction there, since 2005, and I started using Trade Ideas at the same time. We started way back in the day before computers had taken over the market, and there were still men in silly coats, waving their hands to put through orders. And after doing that for a number of years, I went over into the hedge fund space and spent some time there. And now I'm an algorithmic day and swing trader. So I use statistics and back testing along with technical analysis to place my trades. I put my YouTube there, and I put my Twitter there as well. If you guys want to just come give me a follow, that'd be great. And I put a big old Canadian flag here too, just because I know this is presidential profits and all of that, but I just like to say that I don't really know about anything you guys got going on down there, being Canadian. So we're going to talk mostly about stocks and about the impact that this has had to the market, as opposed to the actual, anything about the politics themselves. So that's me. So first of all, I always like to start with this little bit with my presentation, which is performance counts, right? I'm not as famous as some of the guys that I've on here, so let me kind of speak with the numbers, I guess. So first, I'll start with the performance of our AI. Again, this is a device. This is a mechanism that all of our clients have access to, where they can go through and they can have this suggest them trades, and they can have it traded for them if they want through our auto trading system. And we just like to talk about, here's the 2019 to date performance, risking $100 on each trade with all of the factors here. And again, I'm going to go through and do some bragging, but then I'll actually, don't worry, there'll be nice learnable content to be taken from this as well. So first of all, we're going to talk about the trade of the week that's going to go on here, and you can sign up for it here, but there's going to be a special link. So let's move on to that. A special link that you can sign up, and you'll actually get emailed a discount code there as well with this presentation. So I'll give that out to you guys at the end there. So first of all, what is this trade of the week, right? So I always start with this chart because this is the bummer of the chart, right? So we give out a free trade every single week to all of our clients. And, usually you start out with something like this and you say, well, that doesn't look very good until you get to this chart where the average loser is, I think we're sitting around 3% return, and the average winner is a little under 10%. I think it's 8 or 8.5. And again, this is free. This is something all you need to do is follow the link I'll give you at the end, and you'll be emailed out every Monday morning to this. And we're going to talk about the kind of the theory behind it and some of the technology we use to get this. So if you started with a $10,000 account or any amount of account, and you invested that original principal into each trade, opening it on Monday if it triggers, and then closing it on Friday, and you did that since the beginning of March, so before the craziness of the pandemic in the market, and you did that to last week, you would be up 103%. Again, given to you to your inbox for absolute free every week. So then what about myself, right? Well, what would I be, what am I doing here talking to you guys if I'm not implementing what I'm about to teach? So this is my year-to-date return. Again, I'm open and honest about that. So here's the blue line is my equity curve for the year, and the rest here are individual markets. I think there's the SPY and the Qs and maybe some Canadian index there as well. Most people, I guess, if you trade with Interactive Brokers, you'd recognize this chart. So then how? So here's where we get to educate. So I'm done bragging, and hopefully I got your attention with that. And we're it's time to start teaching you kind of what the methodology is that we employ and what it is that we use. So one of the main concepts I like to teach all traders, but especially new traders and people who are potentially struggling or something to that effect, is this concept of relative strength. So I'm going to leave this up here from Michael Moody, who's a CMT, and I'm actually taking my CMT as well, and we'll be finished, hopefully, knock on wood, in the end of the year. So I like to pull from their stuff as much as I can. And relative strength, right, just talks about is the measure of the performance of a stock relative to the rest of the universe. And if there's one thing I can tell new traders, other than the fact that risk management and trading is everything, but if you're struggling out there and if you're finding that you're not making as much as you thought you would or something like that, this is a concept that you really need to study. And it's something, I guess, I watched Steven's presentation before mine. He talked about it as well, where there was a lot of stocks there that were quoted to him to say, look at this, and they weren't doing anything. They weren't exhibiting strength stronger to the market, so therefore they wouldn't be as interesting to him. So again, a very simple concept, but something that we'll go over and I'll demonstrate the importance of with some math here as well. So here's a handful of case studies that were done. As a bit of a stats nerd myself, I like to make sure there's some sort of a back testable or some sort of reason that you could place a trade on top of the fact that just someone told you that this pattern would work. So here's a handful of case studies you can look up yourself if you'd like on how these things work, the mental effects that happens, as well as lots of nerdy stat stuff about that. So here's the process, right? Here, I'm talking about relative strength. I'm telling you the importance of it. I'm showing you the results that we get from implementing this very simple tool. So how do you do it, right? And the first thing is you have to define what is strength, right? And funny enough, I actually have the 8 EMA on my chart here, which I use as well, which I did pick up from Stephen Bigelow there. And he talks about, he wants things to be closing above and this moving average to be rising. So that is his definition of strength. How you do it is going to be entirely up to you. I tend to kind of lean in the same way, where I think if you pick a short-term moving average and you slap it onto your chart and the moving average is pointing up and the instrument is above that, that means that moving average is going to continue to rise, and it's a simple kind of way to do it. But again, you have to define strength before you can define relative strength. So here's something where say you weren't using this moving average and you were just anchoring it to a point and you just wanted to look at the chart. Well, if you look at the SPY here, you say, okay, well, this is pretty strong, and this was done a little bit ago. But if I just zoom out a little bit, you can see just by adding another month or so worth of data in there, it looks a lot less strong, right? So be very careful on how you define strength and make sure you're consistent with that definition. Then next is relative to what, right? When we talk about relative strength, it has to be relative to something. So here I put Apple, the Qs, and Google on a chart here. You can see if you compared Apple to the Qs, you can see there's probably not one is really stronger than the other. One's not, outperforming the other in any way. But you could also say, well, I want to compare Apple to Google because they both make operating systems for cell phones. They're both in that kind of tech space. And you can see Apple relative to Google is performing much better. This pullback was a little less shallow. We're above this base that happened here on Apple, where we're below it on Google. So again, it's important, A, what do you define as strength? And B, what is it that you are becoming relative to? Again, I always suggest a major index or its peers within whatever sort of group that it's doing. Here's a quote that I think you'll see in every Trade Ideas presentation, but it's one that we love. And it's kind of our mantra over at Trade Ideas, where no man is better than machine, and no machine is better than a man with a machine. So what we try to do at Trade Ideas is strike that balance between, a full kind of black box automated system, which is just the machine itself, or a human who's able to use the tools to backtest things and to use an artificial intelligence in order to find stocks with potential statistical edge. So then, how do we use this concept for day trading? So with Trade Ideas, and we'll go into the scanner soon, you can do a lot of pre-market activity. You can do pre-market scanning. This is something that I do quite frequently, where you can scan the market to see, okay, what is stronger than the market or what is weaker than the market at that time in the pre-market. If the market is gapping down, for example, you want try to find stocks that are even or gapping up. And if the market's gapping up and you want to find something that's maybe relative strength to that, you want to find something that's gapping up higher, right? And if you're looking on the short side, you would just flip that. If the market's gapping up, well, what is not participating in the market move, or what is participating more than on the other side, right? If it's gapping down, what's gapping down further than the market? That's one way to look at that for intraday trading. This is just a quick tip that I like to throw in. I don't like to look at gaps in dollars or percent terms because I don't think that means as much, but I like to look at them in standard deviation, which is something we can do, which if anyone just remembers their high school math, most instances take place within this one standard deviation bound. And then, 99% or so take place in this two standard deviation bound. So we have the ability to say, I don't want things that are gapping up or down a percentage because, something gapping up 10% if it's a $1 stock might not be that interesting. Whereas GE, which is also a cheap stock, gapped up 10%, that would be news you would hear all over the place. So we like to compare our instrument back to how it normally does by ranking it. So on this day, USEG was up 29 standard deviations from what it normally moves at the day. It just really shows you that these things are way stronger than they normally are and things that normally happen. After that, you can input that list of things that you're interested in into our symbol list, where you can take a list here and you can check it by just going through and seeing what our news is. We have news in the system. We have what our insiders are doing. We have the profile, and then we have these detail pages that have everything happen for you. And then from there, you can just have it trade it for you. And this is more or less how I trade, and it should be interesting to traders who are like me, where you feel like you're really good and you make good trading plans and good trading ideas, but maybe you're not the best at execution. Well, you can let the system execute the trades for you in a plan that you kind of write up in advance. So then how to use this concept of relative strength for swing trading, right? Now you're a little bit more in my world. I don't really day trade as much as I used to anymore. I don't know if that's a getting older thing or if it's a symptom of the market, but I find I do better and make more in the swing environment. So, can you use this in a swing type of environment? So what we did is in Trade Ideas is we grabbed a community polled list of indicators and candlestick patterns, ones that you just heard of in the last presentation. And we gave a weight to each of these indicators and chart patterns, and then we ranked the stocks by these. So we defined strength in this instance as the amount of indicators that people at Trade Ideas, pretty much everyone who works here is a trader, things that they like, and then move from there. So we created a ranking with this system. And then we back tested it, right? And we came up with different setups from that. We are able to scan for it. So you can see we have this score in the system that ranks things technically, using statistics, using fundamental data. So it ranks it based off, is it making money? Is that amount of money it's making growing or shrinking? Do they have cash? Do they have debt? Anything like this, as well as some social media factors. Are people talking about it on social media? Is it interesting? And we boil it into this number between 1 and 100, right? So you can see right here, LVGO at this time had a score of 98, which is near perfect. And you can see it was setting up nicely here as well. So then you can set your orders. So I have a little gift here. I'll stay out of the way, where again, with the system, you can just say, okay, well, LVGO is a rank of 98. And I think if it breaks out here, it continues. And you just click on the buy button there and click on where on the chart you would like to buy it. And the system will handle the rest, including stop losses and calculating your share size for risk and everything like that. Sorry, taking a sip of my tea here. And then we went back and we tested it further. So the first back test I showed you was about a quarter or so, just to make sure it made sense. And then we went back all the way until 2017. And I started this live at the beginning of 2020. So everything from here on is a back test, and everything from here forward has been monitored and upkept live. And you can see the simple concept here. This is with no technical analysis. It's with no stop losses or fancy risk management, which hopefully would only improve this. But this is just, what if you bought the top 5 ranking stocks and you held them for a week? And I did it on a Monday at close. So Monday at close, you bought whatever the top 5 ranking was. The next Monday, you sold them and you bought more. You can see the percent gain that you have over the S&P 500. Again, just by looking for stocks that are stronger than the market. Here is the kind of a bar chart of the amount of times that this relative strength system, and again, you can use ours. It'd be great. You can design your own. This is, again, I'm just trying to pure lesson here, but you can see how many times, every time the bar is above the 0 line here, it means that we beat the market on that week. And by how far is by how much we beat the market on that week. And then any bar that's under is when we underperform the market on that week. And then again, by how much. So you can see how often you outperform the market and by how much you outperform the market by simply doing nothing else but looking for the stocks that are performing the best. So this chart gets a bit wacky, but this is what happens if you rebalanced and you started with a $100,000 account and you took the profits from any week and you just rolled it in. So you kind of have a compounding effect here, just like compounding interest. You can see from that same starting point to date, you're, I think, 5.5 or so times your money with this kind of compounding factor. Again, just another concept that I like to teach to traders, where it talks about how it's important to, just like you would in putting your money in the bank, you want to create some sort of compounding effect with your trading. So you want to make sure that your risk is the same on a percentage basis. For us, we split this portfolio into 5. We always want to keep that constant, but by just keeping that constant and by increasing the amount at which you're investing, things start to get pretty wild as they go. So here are 2 around the election. I figured, right, we're talking about election stuff, so I took kind of a couple of the best performing ones from the beginning of the election into the end. Actually, let me take a look. I'm going to bring up a SPY chart at this time. I don't think I have that super handy. Yeah, because going into the election, which was the 3rd, yeah, we were just coming off the bottom here. And you can see this one was relatively strong to that. Again, I'll go over to my other chart and show you that in a second. But this one was holding up where the market was kind of pulling down to a low of a base and then taking off. But again, just by finding stocks that are outranking everything else, you can see this this gain from here, and then you would have exited on the close of this date. So it would have been right at this price. Same here with RXN. This would have been the opening candle, and you would have closed it 5 days later on the closing candle right here, and you would have replaced that with whatever is performing the best at that time. So then how do you use this concept or trade ideas in general more for an investing side of things? And I do see questions coming in there, and that's great because I think I'll be running pretty quick with this, and we'll sit and we'll go through the product and we'll answer all the questions that you have with any time remaining. So now we started day trading. We started with, does the concept work there? Yes. Showed how you can do it with some basic pre-market and gap scanning, things that are moving intraday. Everything we do is real-time alerted as well. And you can use it with day trading. Then we talked about how you can use it with swing trading, with something with a week or so hold. And I showed you the stats and the statistics behind all of that, and how of course you can. And that's where I focused most time in this presentation, because again, that's the time frame that I live as a trader, is in the 3 days to 3 weeks, I like to say. So here is, again, this stock ranking system. Again, we can't go into the specifics of everything in it, but it is a technical, statistics, fundamental and social indicators, and a ranking, kind of proprietary ranking given to each one. For example, above the 200-day moving average may add 10 points to the score, and an indicator, say an RSI that is not overbought, may add another point to it. If and again, you can do all of this yourself in the system if you want to build your own relative strength, but this is the one that we've kind of pre-built for our clients. And again, from the fundamental side, it would say, are the earnings growing quarter over quarter? So if they're growing quarter over quarter, maybe that gives another 10 points to the system. So, and then here are some, again, these, especially with Peloton, we know what happened from here was a massive run up, and then a little crack after that vaccine news. But even after this chart in the 120s, it got up to the 140s. REGI was the same story. Again, these charts are a little bit old, but you can see what these look like. So what I picked is the top 4 stocks that ranked at the time that I kind of put these slides together. And again, you can see the look of them in comparison, right? A lot of people, a lot of traders, and I don't know why, but I don't know if it's the saying buy low, sell high, or something like that, but a lot of traders are always trying to pick the dumpy stocks. They're trying to pick the stocks that are underperforming. They're trying to pick stocks that are selling off in order to buy them. Basically, what I want to do with this presentation, obviously promote trade ideas, but if nothing else, just to show you guys that there is merit to go after the ones that are winning. I think the fear that maybe stop us from doing this is to not be the guy who wants to top tick the market, and using a relative strength system, that's going to happen sometimes. That's why we have risk management, and that's why I started by saying that's the most important part of trading. But knowing that just focusing on the things that are working and avoiding the things that aren't, in that direction, it's kind of like Newtonian physics, right? Objects in motion tend to stay in motion, and objects at rest tend to stay at rest. So again, just by focusing on this with a systematic approach, I think everybody out there who's having some problems trading could definitely turn that around. Now, relative strength. does that just mean technicals? Well, no, it could mean fundamentals. It could mean, for example, I want the company that is growing their earnings the fastest, or I want the company that is growing their cash reserves the fastest, or paying down their debts, or with the highest dividend, right? Maybe that's I'm not looking for capital gain at all. I'm looking for dividend gain. So you can scan for dividend yields, and you can scan for cash on cash growth and quarterly earnings growth and things like this within the system as well. So again, it's, trading is a very personal type of journey. So whatever you look at may not be the same as what I look at. So I'm just trying to give you all of these different options. So here's a fundamental scan where we called it revenue growth fishing, where essentially what we're looking for is stocks that are growing their revenue. Right? You can see APT here was growing its revenue 123% from the last time. So maybe this is the way that you define relative strength, is that this is quite a bit of revenue growth compared to some of the peers that are here, right? Even a 20% revenue growth, I think, is a great thing, but again, maybe that's what you want to look at. And even on my other screen here, looking at APT, it's still pretty much in this $15 area. Actually closed at, I think, $14 today. So it's a little bit, in this area now. So again, right, if you're a fundamental guy, you can use this concept of relative strength with that as well. And then here's a value investing dream. So is the name of the scan, but it's essentially a price earnings ratio. So again, maybe this is what you want to look for, where you don't want to look at price action in relative strength, but you want to look at something like how is the stock performing relative in a price earnings ratio relative to its peers or relative to the rest of the market. I just picked LRN here because it had a pretty good ranking when it came to price earnings. I just sorted the whole market by price earnings, and you can see it was down here to a support area. So that's a way to kind of combine the two concepts here. Lastly here, I think this is lastly, dividend, right? Again, I talked about earlier, maybe you don't want something that moves, but you want something that pays dividends. Well, maybe you rebalance your portfolio frequently into whatever the highest ranking dividend yields are. Understanding that when a dividend yield, I guess, gets crazy, there's a chance that they're not going to pay anymore. But again, that's to the user. I like to throw this at the end of all of my presentations. If you follow me on Twitter, which I put in the beginning, and I'll paste up in the chat room there as well. I do this all the time, where I guess the guy who built the slides for me auto-corrected me, but I actually just say win rate don't matter, and part of it is to trigger the grammar people, and I put a random number after it to trigger those people as well. But what I'm showing here is all days in which the win rate wasn't very good, but yet I was able to eke out profits on all of these days with even sub 36% win rate, and still being able to pull in a couple bucks. So I just wanted to kind of point that out again, because I do believe that if there's anything that if there's anything that you want to take from me, if there's anything you want to take from my journey as a trader, it's the simple fact that I stopped the moment I became what I consider a good trader. Was the moment that I stopped caring about my win rate and just focusing on the risk and reward side. So that's why I tweet these constantly, just to tell people, right, again, don't focus on that. It doesn't matter. Focus on the risk, and then kind of everything else. Again, if you have some solid plan, like a risk, like a relative strength, or using our AI, which I'll show you in a second, it makes life a lot easier. So this trade of the week, the one that I showed you kind of way back here with the way back here, I got through a lot of slides pretty quickly. I hope I didn't whipsaw anyone. There we go. This one here, where again, if you took every trade, it's 103% year-to-date return. You can get that right here, and I'll put this link messaging tab, and you can sign up there. And you get just put in your email and your name, and they will send you out this every week. And then if you want to sign up, you'll get a code for 20% off any subscription. At the very least, you get these free trades that we give out. The one around the elections, I haven't really talked about that one. It was just cash going into the election. We didn't recommend a trade for that one just because of, who knows with the volatility and all of that would occur. Okay, guys, so I'm going to switch this over to show off the system. And at the same time, you can start asking questions as much as you want, and I'll get to those. So hopefully if I did that right, you should be able to see my screen here.
Yes, we do see your screen. And Michael, before you move into this area here, I mean, wow, the percentage, to define relative strength as something that's relative was quite an accomplishment and extremely well done. And it strikes me, there's so many ways that you can slice and dice that. And I guess it gets down to the individuals, what they're looking for. But throughout all that capabilities, do you have like a recommended relative strength that you have people look at? Or is it really variable to the market that's being traded and the trader?
Well, we have something built into the system, but the first thing, and kind of with, grab that.
Because I could see myself trying to build the perfect relative strength.
Well, yeah. So we tried here, right? And this is kind of the table and the scans of stocks that meet this. But you're right, where it is going to be important to the trader, and that's why I tried to go through different time frames, because myself as a swing trader, I like this system that I built. So,
Sure.
of course I do. But if you were, for example, looking at, you zoom this same chart out from a daily chart to a monthly chart, this may not be the strongest instrument that is then out there, right? So you have to say, what is my, what's my time frame? What is it that I like to look at? Am I a day trader? Well, then I'm going to look at that time frame. Am I a swing trader? Am I a investor? Am I a position trader? Any way you want to skin it. And then also, am I a fundamental trader or a technical trader or something like that, where I'm going to define my strength differently, right?
Absolutely. Because that tied into a question that was brought up by one of the other people here in the room, where how do you determine which stocks have the highest RS? As you said, there's a variety of indicators there. And how's the best way to scan for that?
Yeah, so the one that we build for our clients, because we find that most of our clients anyway are day to short-term swing traders.
Okay.
We've defined it with this score that we call it, and again, we can't go through we got to keep some of the secret sauce in there, but
sure.
Again, you'll notice things like each of these that are ranking higher are going to be above their short-term moving averages, and they're going to be above their longer-term moving averages, the 50, the 200, the things that everyone looks at. Okay. I'm actually sorry, I'm doing a little work here too. I want to put that on a list for tomorrow. But you're able to define that yourself as well. So for example, if I wanted to only find stocks, and this is kind of where Trade Ideas started before they hired nerds like me and got real technical, is we have the ability to scan for, almost anything you want, right? So I'll just scroll down the list here. These are all of the different filters that you have access to. And then you can change and modify these kind of to your heart content. But if you're someone who says, for example, I'm a 3-day trader, so I want to make sure that this stock is well above a moving average that's that short term, then that's what they would define as strength. Or, even the old turtle trader style, in which they would say, this is the thing I want to focus on, and I want it to be, just call it simple price action, right? Maybe you want the stock up a couple weeks in a row, or you want it up on the year, or however have you there.
Excellent.
So yeah, let me.
And you showed
Sorry, go ahead.
obviously that, with the platform here, there's very, very straightforward way to back test and take a look at that as well.
Yeah, I'll let's actually go through that. And first, it'll be a good way to talk about our AI. So this is the AI that we've built that essentially it gives our traders, any subscriber, any premium subscriber, live real-time alerts. So if we go in here to an intraday chart, let me actually find something we'll find you a real good one, and then we'll show you a couple real bad ones too. So during the day, let's zoom this in to say a 15-minute chart or so. During the day, we suggested, again, a very strong stock with this one, doing 7 times the relative volume, which let me bring up my pen here, but is on my lower right here, reported earnings this morning. The AI uses the backtester, which I'll show you in a second, and essentially what it does, it takes about 70 or so different algorithms that we've created, and it backtests them and optimizes them every single night. So we've got the system up to the point where it's doing about, I think it's about 40 million Monte Carlo simulations. There's probably like one other nerd in the chat that's like, oh, I know what that means. But so what it's doing is it's saying, okay, it learns from these algorithms that we built that are built by traders of things that traders like to see. And then it says, okay, what situation does these work best, right? You find the situation that says, okay, as a trader, I think Steve Bigelow talked about his best friend, which was a doji and then a gap after the doji. So, if that's an algorithm that we put in the system, it would say, okay, well, under what circumstances right now in this current market is that working the best? And it will optimize it and say, okay, what if it's above the 200-day, or what if it's below the 200-day, or what if it's doing, a lot of people are talking about it on stock twits, or no one's talking about it on stock twits, or whatever have you there. And then what it does is it does these millions and millions of combinations, and it tries to figure out the one that works the best at the time. Again, for my fellow stats nerd out there, using a genetic algorithm and a Monte Carlo out of sample data kind of combination there. And then what it does, it says we puts through this thing that we call the quantitative combine, which it's going to filter out the ones that aren't working the best, because if anyone's ever built a trading strategy before, you notice that they usually work well. You'll get something, you'll back test it, and it will look like this, and it will look great, and everything will be fine, and then it starts to maybe do some of this, and it might be market conditions, or it may be that whatever game you were playing was found out, and now it's gone, but who knows. So it will only give our clients the algorithms that rank at the very top, and says these are the ones that are working the best in this market, and this is the optimization that we've done for that in this market. And that comes with all the back tester, which I'll show you, but then obviously a lot of complex back-end math. And then it provides you live in real time, and it says, okay, here's the entry price we want you to take. We think it's going to be wrong if it gets to this stop loss. Here's a suggested profit target, right? Obviously, with this one, you would have been better, maybe taking some off or using some sort of trailing stop. Again, here's the ADMA, and I've listened to Stephen Bigelow enough that he'd say you stay long until it closes below the T line, and that would have put you, to the end of the day. And again, it suggests this all in real time, so our traders can kind of look at it and say, okay, is this something that makes sense? Maybe it doesn't. And if they want, and currently only through Interactive Brokers, but over the next couple months, let's say, we will have TD Ameritrade and E-Trade in, working with more brokers come the next year. You can actually link your system to either our sim if you're new and you want to start trading, or to any of these brokers, and then say, okay, I want the system to enter for me, and maybe I'll exit, or I want it to do the whole trading for me. We obviously suggest that the trader watches the trade and kind of plays with it and does what they want. But, for example, I don't know if this will work after hours. If I just wanted to I don't know, put in some Apple, you can place the trades through here in the same way that I showed you on the presentation, where you can place them through the chart. So, you can decide which of these to participate in. You can participate in all of them. You can cherry pick some of them, and you can manage risk as you want. And the beauty of it, the reason I wanted to show you one that didn't work, is because everything has a stop loss. Right? So the one thing that we've noticed that costs traders more money than anything else, and I've been hammering the table on this quite a bit, is this risk management aspect. It's the fact that, and I'm sure you've heard it as well, right? That I was doing fine, and then I let one trade go, and there goes my account. So we put a stop loss with every single trade, bar none. It's kind of in our core and in our tenets. So that's the AI and roughly how that works. You can see today we track all of this live, and it's all on our website. We don't like to hide anything. This was, I will say, an exceptionally good day. It performed because I think it knew I was talking to you guys, so it didn't want to. I didn't want to hold up. But if you risked $100 on each position, it was up. You would have won on 83.3% of the positions, and here would have been your profit, and then the profit chart on, again, risking that $100 per position. And we always hope that our clients take these data points and say, yeah, but I want to do better. I want to find a way to find the stocks that meet my parameters and focus on them.
And of course, they have the ability then to plug in their parameters, and then your AI, your system is going to go ahead and say, okay, then here are the stocks that meet those.
Yeah, well, it's our parameters, so it's not. It's not user defined. But if you want to go a little bit more manual, this is what I'll show you. Where, I have this kind of simple trading strategy. That's a swing trading strategy in which I like to go into the daily chart here. It's very simple trading style. Again, you'll probably know that I did get some inspiration from Stephen Bigelow with this one, where it looks for a stock that is pulling back and then puts in a doji, and the following day shows some strength after that. So you can go back on the chart. You can find out right here would be one. Again, I don't think he would like this one in particular, but I liked it, at support. But you can go in, you can put in your settings and do all this. And
sure.
Once you have a scan, you're like, I like this scan. I like what it's producing. Well, then you can just right click and you can run a back test, and you can say, well, when do I want to enter? I'm okay with entering all day except maybe the last 15 minutes because this is a swing trade. When do you want to exit? So I want to exit, 3 days from now. I want to put the stop at yesterday's low. That's how I want to manage my risk. I can put in a profit target if I want it. All of this, I want to back test for a quarter, which is our current back testing limit. We're looking to kind of expand that out a bit, and I get this nice summary of my trade as it goes here. And then if I just click simulate buy, what the system's doing here in the back end is it's going through all of these trades, and it's saying, okay, what would happen if you took every trade as it came through here? You bought it, you put the stop at yesterday's low, you held it for 3 days, and then you closed it. What would be the output? And this, I think, this is where I spend a lot of my time, because it gives me that kind of conviction of what I'm looking for. There's not only a technical, makes sense technically, and it's something that's common technically, but there's also a statistical edge. So I can see what would have happened to my capital, my $50,000 starting capital, if I had traded this to the point, not just looking at it from an equity curve point of view, but I can see on each individual day by hovering over these what my P&L would be. If I want it to go through, I can actually click on these symbols and I can bring up on the chart, and it says, okay, you would have entered right here, which this one I know he would have loved. He would have entered right here, and this is where your stop loss would have gone, and you would have exited 4 days later. So where does it say the exit is? 36.39 or 46.39. So that probably just would have been up in this little area here. So it's a great way to say, okay, here's the idea. I created the idea. Now let me see if my idea actually holds weight. And in this case, right, this one obviously does, right? You can see the equity curve here. So it's a great way to go from I have an idea to, instead of kind of the old school way of doing it, which I'm sure that the two of us were involved a lot of, where you would, scroll back on charts and you would print them off and you'd mark up, this is where I would have entered and this is where I would have exited. It's a way to let a system kind of do that. It went through 3 months of data and told me what everything would have happened kind of just in that time frame.
Does this, we're looking at an awful lot on stocks. Does this also work intraday in the futures markets?
Equities only right now.
Equities only? Okay, good.
Yeah, we have people that will use the ETF counterparts. So what they'll say is, well, I only want to look at ETFs intraday. What you miss there is obviously the extended hours of the futures, but we have a lot of clients who will just make a list and they'll backtest their own strategies on different ETFs. We're planning on expanding out to different markets soon. Our focus right now is getting kind of more brokers into that auto trader and more strategies into the AI.
Sure. Okay. It's interesting. We had several speakers earlier today, talking about techniques where you sort of get a sense of where the market is going, and then you look for stocks that are outperforming the market, and then you look for weekly opportunities where you're placing orders, extremely out of the money, to kind of create these situations. And I can see how this tool could also be helpful in that regard.
Well, yeah, and that may bode well to this. So this is not just 100% that relative strength system, but what I did is I put a little bit of a twist into it. And again, you can do all of these things where I wanted to see the top ranked stocks, but I also wanted to see the top ranked stocks with short floats, right? So for example, APPN is one of the top ranked stocks. It's 95 out of 100, which is a very good score, but it also has a 35% short float. And I'm getting all these numbers from right here, which is this kind of data panel that we have where you can put in whatever you want, but I want to see things like short float, what's the change from January 1, how many people are talking about it. It's got 200% mentions on stock twits today, things like this. But yeah, you can take these systems and then you can apply to them whatever you want. So you're talking about someone there who like to use weekly options. Well, maybe they want to see these stocks, but they want to make sure they're optionable. So we can filter out everything that's not optionable. And, from there, maybe they want to hunt through these stocks and try to figure out what's going to meet their goals the best when it comes to implied volatility and the price of the stock and all of that kind of stuff. And so you can take this concept and you can and that's why I love so much about it, is you can slice it or layer it any way you want, but it gives especially new traders a very kind of simple framework in order to get started, in which you're, in which, okay, I have my framework, and it stops you from doing things like catching falling knives and buying really junk stocks, which we know get people into a lot of trouble. So I see a question there from Jake. Is the backtesting against the single stock? So no, this is one of the things that I think separates our backtester from the rest, where most backtesters, they're looking at a single instrument. You say, okay, I want to see how a MACD crossover works on Apple, right? And they'll bring up the stock and they'll bring up the analysis on just that instrument. But what we call it is an event-based backtester. So again, for this one, I'm showing you the event is a strong stock, so a stock above the 200 period moving average, pulling back, putting in a doji, and then looking stronger the next day. And it has to be above the 10 period moving average at the time of the breakout, right? So you can see this one barely got above that at the time of the breakout. So what it's doing is, instead of saying, hey, stock by stock, let me tell you if this works, it's saying, I want to go through every instance, every event that this has occurred over the last 3 months and saying, okay, if you took every single event, what would happen, right? So you can see here, if I open up this day, what's the 6th? Yesterday? Or no, there hasn't been anything closed since the 6th, I guess. Right? You can see that the stocks that were closed on the 6th was Procter & Gamble. This one probably would have closed for a bit of a loss. JWN, this one would have worked fantastically. Right? So all of these different symbols came through this because I'm not looking for symbol by symbol. I'm looking for an event as a total. And again, that's it. It takes a lot of computing power, a lot of back-end computing power. So you don't need a lot of computing power yourself, but that is kind of where we like to focus, is on that the big data side of things. We note that a lot of traders that come to us, they've already got the technical analysis skills. They understand wedges and triangles and dojis and spinning tops and all of this. Their problem is then finding them on a timely manner, so that they're not chasing the stock. They say, oh, I found the great setup, but it's 2 days later. We want to, the closer you can make your entry to what you want your setup to be, the tighter your stop can be. And it goes back to that risk management being the holy grail of trading. And the free trade of the week, which hopefully you guys are signing up to, giving you 100% return in a fairly short period of time with only a 48% win rate, right? So we want to make sure that you find the stocks quickly, so you're not, having to take a wider stop than you normally like.
Unbelievable, buddy. I'm sitting here going like, you've just quantified my gut feeling.
Well, and that's what
I've always wondered what those drivers were.
Well, and it's like, it's sad to say, but in this industry, there's a lot of hullabaloo, right? There's a lot of people saying, hey, you should do this. This is a great setup. Do this thing. And part of the reason the owner of the company made this is because he wanted to, test a lot of these claims and say, okay, well, you think, you're selling me, or you're buying your 200 period moving average course. Well, I could quickly, with this system, go through and say, okay, well, let's test that, right? How does buying a moving 200-day moving average actually work over the long run? And I can give you those stats kind of very, very quickly. And I look at it as reps. We all know that trading is a game of reps. You want to put in as many reps as you can over and over and over again. When I ran this back test, it back tested 113 scenarios, right? How long would it take me for a 3 or 4 day hold to go back and make 113 trades to give you a number? So, right. More reps, shorter period of time, hopefully shortens the learning curve and helps people trade better.
Oh, fantastic. Michael, thank you so much for joining us today. And
anytime. It's great fun.
And for batting cleanup. I mean, it was just, and I just think this is a perfect way to end what has been a very eventful 2-day session for us. To land here with something as modern as this, and the kind of tools and what we've been able to aspire to, if you will, with the technology that at our disposal. I just think it's a great way to end. I think it's a great way for people to think about, how we want to go forward. We got 2021 staring right at us. Mm-hmm. We've had people talk about the kinds of things that are going on, the pillars that are going to be driving this economy, and the ongoing potential for wild swings in the markets and volatility as new sectors emerge and older sectors decline, et cetera. Having tools like this, especially for people that are looking for longer term buy and hold decisions, things of that nature, it just strikes me as this would just be invaluable to have this. So sign me up as an advocate.
That's great. Well, I think we have a link for you to get all signed up.
Outstanding. Thank you so much once again for your time. I hope you have a great day, and give my best to the rest of the team at Trade Ideas.
Awesome. Will do. And thank you for having us. Anytime. Let us know and we'll be out.
All right, buddy. Thank you.
No problem.
Okay, folks, that was Michael Nauss with Trade Ideas. Wow, what a presentation. And once again, the special offer from Trade Ideas is a weekly free trade idea that's delivered directly into your inbox. And so you're going to see, a trade per week. You're going to see how the trade of the week was identified. You're going to understand, they're going to share with you the technical conditions that drove that decision, and to further find out how you can learn to make these kinds of trades on your own. I think that's a valuable service, incredibly invaluable. It's a nice way to get introduced to them as a company. All you have to do is go to westmarktrading.com, M11-free trade. Just put your information in there, go for it, and start to get these trades of the weeks delivered to you automatically. So once again, terrific offer. Wow, ladies, here we are. It's the end of the week. It is quiz time.
It is.
Last quiz of the day.
So we have to tell you, it's National
Happy Hour Day.
Yeah,
It is National Happy Hour Day?
it is. Or we
Wow.
wouldn't be drinking.
That should be a month. Don't you think that should be a month-long holiday?
I think it should be
no.
2020
I think
holiday.
that's gonna,
Yeah. But we're going to get into that quiz.
All right.
All right.
So let's go for it. I think at this point in time, everybody knows the rules. You think? And with that, the final quiz question of the session.
all right.
Which 20th century president never earned a college degree? Well, that's interesting. A 20th century president.
Mhm.
Yep.
And I think I should bring up our jingle.
Thank you.
Okay.
I think the timing is perfect.
Absolutely, because we do have a winner.
All right. And so the winners, Ching,
Ching.
Ching.
Congrats.
And the moderators will get with you so we can award you that card. What's the answer?
Harry Truman. And what's interesting here is that, apparently, I mean, he's a very, very bright guy. He skipped third grade and, came from a very modest family. And when he graduated from high school, finding affordable college was somewhat of a challenge. He wanted to go to law school. He started a couple of times, but was never able to finish. So once again, he does not have a college degree, but he loved to read, he loved to learn, and he championed the creation of many of the affordable community colleges across the United States. So I think that's a great way to end.
I think it is.
I
We
think so.
enjoyed it. Thank you for everyone for coming out, supporting these events. We will contact you for our December event. We're doing something a little bit different, so I think you'll be surprised pleasantly.